everybody. It's time for this week's Mortgage Minute with Tatiana Ivleva-Lopez from Prosperity Home Mortgage. Hello.
Hey, Tatiana.
Hi guys, how are you?
Good.
Doing good. We're about to find out if we're better or worse. Are you nice or naughty, or are you just kind of like floating?
I'm not wearing any hats today.
Yeah, I was just say she hadn't had a
I'm
hat
just
on.
neutral today.
Yeah.
Let's see what's going on. Gonna be like this, a little bit of difficulties as always. Okay.
Yeah.
Yep.
So as you can see right here, the rates are pretty flat, right? So comparing to last week, 6.97% for conventional. FHA government loans, they're a little bit better, 6.5. Jumbo is a little bit better today, 6.88. So yesterday, U.S. Bureau of Labor Statistics released the October Consumer Price Index, CPI. That's a key that measures the inflation. And the report shows that inflation has followed expectations, meaning that Fed will likely to cut the rates once again in December. So, but even so, the mortgage rates will probably remain high due to speculations and volatility until Trump becomes the president and if they start implementing the policies. So at this point, I think rates are just gonna stay as high as they are. And if someone wants to buy right now, it's gonna be the same for a few months.
Yeah.
Okay.
So those are the
And
expectations.
let's keep it in perspective. High for what we've experienced recently, but it's kind of in that normal range. Just kind of keep that.
Exactly. High meaning like in high sixes.
Yeah. Yeah. Okay.
A little bit higher comparing to a month ago. Yes.
Yeah.
Yes.
Okay, but I always do like, especially in our market with where we have the price points that we have, I'm always interested in knowing what the conforming is, or the conventional rather versus the jumbo. And they kind of like do this bunny hop thing where sometimes the jumbo is better and sometimes it's worse. And I think that's really interesting.
Yeah. But I have another bonus slide for you. Those are the predictions for the interest rates in next year. So as we can see, and I'm on a different screen, so I apologize. So we have last quarter here, predictions are in 6.5, it's actually a little bit higher than that. And then you can see that they're all pretty much close to each other, and it's red is Fannie, purple is National Association of Realtors, yellow is Wells Fargo, and gray is Mortgage Bankers Association. So they all predicting the rates to be in sixes.
Yeah.
First quarter of 25, a little bit below 6 in second quarter and third quarter and fourth quarter. So the rate's probably going to be in mid fives per their predictions. So we'll see.
Okay.
And they all kind of seem to pretty much agree.
Yeah. They all in agreement.
Yeah.
Hopefully this happens, because weren't we predicting the same, or not weren't the predictions the same thing for the end of 2024, that we were expecting kind of to be in the mid fives by the time everything shook out?
Exactly.
Right. And I think this does buyers a huge disservice because it tells them to just keep waiting and keep waiting and keep waiting. And I wonder if the powers that be know we don't have enough houses for all the buyers out here. And so they're trying to get everybody to hold off as much as possible. These are just deep thoughts by Kelly.
You bring up a good point, though, because that's causing people to wait, just like people waited for the end of this year thinking it was going to come down. And we just did our month-over-month market report, and for October in Fairfax County, the appreciation was 8%. So $1 million house, that just cost whoever's sitting there waiting $80,000 in appreciation. I don't know if 0.5% or 1% on interest rate is worth $80,000. So buyers kind of have to make their decisions based on all the factors, not just the interest rates.
Exactly. That's why we keep on saying the same thing, and we're gonna keep on doing our job telling
right.
people buy right now and refinance later because you're
That's
gonna
right.
miss out on the appreciation. And just to your point, 1% or 0.5% is not gonna do much when appreciation is 8%. So
Yeah,
it's
Exactly.
better to buy and refinance later. It actually also hold, people don't want to refinance right now, waiting for better rates, even those that already have mortgages. And I have some clients with interest rates over 7%, and they don't want to refinance yet, even though they could get better rate, but they just want to wait. But in this situation, it's important for those who wants to refinance just to see, what the monthly savings are versus the cost of
Yeah.
refinancing, how long it's gonna take you to recoup the cost, and does it make sense for you to do it? That monthly savings, are they large enough for you to refinance, or you just want to wait?
Yeah.
yeah,
You don't
Yep.
want to refinance a couple of times, so that.
Tatiana, I want to ask you this. This is a good segue into this. I just heard from a client that you're helping with her loan. Tell me, is there something that VA has where they will, if the interest go down within a certain amount of time, they'll automatically lower it without any fees or something? Can you help me understand that?
Well, also the VA has very good streamlined refinance process where we don't do credit qualifying. We don't look at income, credit, and we don't do the appraisal. So it's very minimal cost to the buyer. It's not automatic rate reduction. It's still a process. You still need to record the new loan, but it's much cheaper because we don't charge origination fees. There's not gonna be qualifying bunch of documentations and things like that, and no
Okay.
appraisal done.
Okay. All right. Very good.
Makes
Yeah.
sense.
Yeah.
Okay. Anything else?
No, are you ready to move on to today's big topic?
Today's big topic. Topic.
Okay.
You announce this one. I can't speak.
Okay. So are you ready, Tatiana, for the big topic intro?
Always ready. Yes.
Okay. Will you please help us understand the 5 C's of credit as it pertains to mortgage loans?
All right. I'll be happy to. Let's see what we have here. So the 5 C's,
That's a great
as we
graphic.
know, can you see it well?
Yeah.
Yeah, awesome. So 5 C's, that those are the main pieces of puzzles, right? So that we look at when we approve a client. So we look at character. Character meaning, the credit, right? So have you successfully repaid loans in the past? How's your credit looks like? How's your credit score? What's your spending pattern, right? Are you able to handle multiple credit lines and not being late on them? So that's character. Capacity would be how much money you make, how much of the payment you can afford. Will this purchase help increase your revenue, or what's gonna happen when you have X amount that you make comparing to your mortgage payment, or other spending. So basically that's that to income ratio calculation, right? How much
Okay.
monthly obligations you have versus your monthly income. So that's capacity. The capital is the money. How much money you have to put for the down payment, for the closing cost. Maybe you might need to show even extra for reserves, not only what you need to bring, but not to completely deplete your assets. We might need to see extra money left over in your account, in some cases, not always, but some loans would require that.
Okay.
Okay.
So, and then we have collateral. Collateral is if first three character, capacity, and capital were pertaining the client themselves or the financial part. The collateral is the property, because when bank is giving a loan, they have interest in collateral. So we need to make sure that the property also meets the standards and guidelines. We want to make sure that it's in livable condition, that there's no safety or hazard issues in there, that the client, when they're gonna move in that property, they're not gonna run out. I would be saying that it's impossible to live in here, right? So we do look at collateral, and of course we do appraisal. In most cases, we want to make sure that property value is at least the same as the sales price, so they're buying it in the market value. And the fifth would be condition. What is the purpose of this loan, and how is the, in general, what the terms are. We want to make sure that if buyer is purchasing it as a primary residence or investment property, there are different terms and different conditions could apply to that. And, in general terms, that's something for the borrower also to understand. Is it going to be 30-year fixed, 15, 20? Is it going to be fixed loan? Is it going to be adjustable rate mortgage? What type of loan it is? So those are our 5 C's.
Okay, so condition is more like, what are the conditions of this purchase?
Like terms, maybe.
What is the condition of the property, right? So it's not like your home inspection or anything like that. It's the conditions of the purpose of the purchase.
Exactly. So the conditions of the loan itself, but those inspections of the property, that would fall into the collateral, the fourth.
Okay.
And then character is not a person's character; it's a person's financial character.
Yeah.
Exactly. Yes.
Yeah. Like if you see very little like Amex cards, but you see Ulta and DSW and Best Buy, it's like, well, I think they like really shop and really like cave to those. Would you like to apply for our credit card? Which, by the way, I have always said no to those. Always said no, no, no. And then there was one of these info things we did, and I think you said that like showing one revolving card, like so that you can totally encompass the breadth
all the
of
categories.
You're like that can be a good thing. So
that's where that came from.
That's what
I'm like, what in the world? Why do we get
masks that they sell that actually you and I both use?
Yeah.
And I would get it like once a month, and I was there getting our face mask, and they asked me, and I'm like, and I thought about you. Tatiana said yes, so yes, please.
I hate to burst your bubble, but we already had Home Depot.
That's right. Home Depot doesn't count. Home Depot
count. It does count.
It's my baby.
Oh, all right. Well, thank you for that. That was very informative. And I've often wondered. We always tell people during like the buyer consult that it's the buyer and the property that have to qualify. But having that broken down into the 3 aspects of like what does the buyer mean, like it,
and then the 2 of the
property. Yeah. So that was interesting. I like that.
Yeah, I love it. Thank you as always.
You're welcome.
All right. How can people get in touch with you if they need you?
You could just call me 571-245-3000.
All right. We'll see you next week.
Bye, Tatiana.
Bye.